From the Nebraska Soybean Board Studios, I'm Alex Makovica with a check of today's midday market activity. As we head into the noon hour, grains trending lower, livestock, cattle just a tick higher. And joining us to break down factors, Jim McCormick with agmarket.net. Jim, the leader to the downside again today is the wheat pits. Tell us a little bit more about what you're seeing in these grains, what's moving the markets.
Like you said, the wheat market is leading us down. You saw wheat pick up a little bit of premium, I think, in the last couple of weeks as they were uncertainty of what was going on in the Middle East. Middle East is a big buyer of wheat, obviously, importer of it. With the tensions essentially declining in there, the wheat market's coming down. On top of it, we have wheat harvest going along pretty quick. So that's pressuring the market. The bean market's being pressured on better weather at this point in time. And the corn market isn't really breaking today, but it is trading back down near its essentially winter summer lows from a year ago. So finding a little technical support there, but overall the weather is being viewed a little bit bearish, limiting the buying.
Well, for the first time in a long time, we saw lower cash trade last week. Nothing has really kicked off here as we talk on Tuesday, but live and feeder cattle futures trending a little bit higher, which was a turnaround for the most part from what we saw yesterday. Drivers in that complex, what do you see so far today?
I think there's two things going on. First one is technically we went down on that August cattle, essentially went down, hit the 50-day moving average, held it. So we saw some technical buying show up after the correction. Then on top of it, like I mentioned, the Middle East tensions have simmered, have cooled down, I should say. The stock market is liking that. So the stock market is rallying. The dollar is weakening a little bit. So that is adding a little bit more confidence into the buying. We'll see, Alex, as we get into July, past July 4th weekend, coming up quick, the demand tends to slide a little bit, but maybe a little bit of optimism for some short-term buying due to the holiday weekend coming up.
Real quick, Jim, they had talked about a strike, a boycott against McDonald's. They are obviously the largest purchaser of beef here in the U.S. Do you see that really having an impact on the markets here, or is that something that's maybe just a little bit of chatter?
I think it's probably more of a chatter than anything else, but I think you got to keep an eye on what's going on with McDonald's and the beef. They're not promoting beef, Alex. What are they promoting? They're promoting chicken right now. Chicken strips, chicken sandwiches. So that tells you right now McDonald's is trying to drive their consumer to the cheaper protein, which is chicken. Interesting enough.
Okay. Yeah, absolutely. All right, we'll dive into this and a whole lot more this afternoon on the channel Final Bell. Jim McCormick of agmarket.net will be joining us for that conversation, so I invite you to tune in on our rural radio network stations. From the Nebraska Soybean Board Studios, I'm Alex Makovica.